The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone, and welcome to our webinar today, looking at what has happened in South Africa in the first half of 2018 and what we can expect going into the rest of the year and into 2019. Today, we're joined by Simon Freemantle, our Senior Political Economist, and Elna Moolman, who's the Head of Macroeconomic and FIC Research. And they're going to be talking, Simon's going to be talking about the political aspect of all the developments that have happened since the beginning of the year, land reform, and touch on the impact that will have on the economy and conversation around land expropriation without compensation going into the new year and into election season. Elna will be focusing more on the economic aspect of what we're going to be, what we can expect, what's happened in the first 6 months of the year, and how that leads us into the end of the year and going into 2019 and the various headwinds that we may or may not face. Before I hand over to Simon, however, I just want to make sure that everyone can hear me. So if you can hear me, could you please lift your digital hand? It'll be the hand icon near your name. All right. Perfect. And once again, we will be taking questions right at the end of the webinar. So Simon and Elna will do their presentations, and then we'll take questions. If you want to send questions, please just go to, there's a questions tab near your name. You just need to click on that, or it'll be a question mark. Please click on that, and you can send questions throughout the presentation, and Simon and Elna will take them once we're done. Okay, Simon, welcome. Over to you.
Thank you. Good morning, everybody. So I'm just going to take you through for 10 minutes or so my thinking around the current political situation that we face. Certainly contextualizing or trying to contextualize the announcement that we had 2 nights ago on the ANC's new position on land expropriation without compensation. So I'm going to contextualize that through understanding, or at least portraying my understanding of where we are in the new dawn, or the reform phase that many expected to come about as a result of President Ramaphosa's election, first as ANC president in December last year, and then, of course, as state president in February. I think conceptually it's useful to segment the new dawn, let's call it that for the purpose of this presentation, into 2 stages. Stage 1, which I think we've seen since January, and I think we've seen the bulk of, and probably tailing off now, the reforms that we can see in that stage, is really concerned with stabilization. So what we're looking at there is looking at the key state institutions that were most harmed during the last, certainly the second term of former President Zuma's time in power, and looking to stabilize them. Better personnel, ensuring that the fiscal position is improved, bringing lenders back on board. Elna may touch on Eskom later, but clearly that was the state institution that was in the direst need of intervention. And we saw a new board coming through in January, and we've seen a number of initiatives announced there from a political perspective since. But it's not straightforward. Many of these state institutions were placed in a highly precarious position, and the leadership and the executive changes have been part of an overall stabilization package, but they are not yet framed as structural reforms. That's where we start to segue into stage 2, where we're dealing with more macro-political, long-standing reform agenda. But before going into that, I think let's articulate stage 1 in understanding what it is that we've seen since January. Of course, the Eskom board, various other boards have been changed at Transnet, at PRASA, at Denel, at SA Express. These were all geared towards unraveling the control of these state institutions that the previous administration and those allied to President Zuma, former President Zuma, had. Secondly, of course, we've seen a fairly meaningful cabinet reshuffle. We've seen fairly sizable investment commitments from some foreign governments stacking up into the president's $100 billion commitment in the next 5 years. We've seen changes at the head of the Hawks. We've seen changes at SARS, of course, interim capacity for now. And these have all been vital in sustaining the narrative around the new dawn and creating the optics that the executive changes that we saw earlier this year are meaningful. And I think we shouldn't underestimate the importance of the changes that we've seen, because they have been vital in stabilizing a variety of institutions and offering them with the capacity to start to grind upwards. But few would have expected that the upward trajectory would have been V-shaped. There was always going to be substantial challenges that the new leadership at these various state institutions would face. I think that there are a couple more stage 1 interventions that are still required. Perhaps the biggest outstanding one is the head of the NPA. The president is clearly committed to changing the officials that currently run the NPA. There have been some setbacks or some delays. The Constitutional Court is still we're still waiting for the adjudication of the Concord on Sean Abrahams' appointment as head of the NPA. And of course, the Supreme Court of Appeals judgment on Nopojiba and Lawrence Mwebu has somewhat set back the ambition to remove them there. But yesterday we saw an inquiry announced into their roles, or at least their conduct at the NPA. So stage one is probably 70-80% done. It's that stabilization phase, trying to stack key institutions with better officials, get the investor community start to believe in some of these, the capacity of these institutions to correct over time. But it's stage two that we're moving into, and I think the last 2 months we've seen a great deal of uncertainty arising on the back of weak economic data prints, which obviously Elna will speak to, certainly with the elevation of political noise around the land issue. Julius Malema certainly upping the ante in terms of the populist rhetoric that he has pushed out on, certainly on land, but on key other issues as well, criticizing state institutions like SARS and National Treasury. And there's been a certain sense of uncertainty which has arisen as a result of that. And within the ANC, there have been changes, but certainly there are indications that the ANC as an institution is still fairly thoroughly compromised. The election of Kadani Mahlangu onto the Gauteng PEC was a signal that this is a party that is going to take time to be able to re-engineer its own internal accountability systems. So the past month or two have certainly reflected the deep challenges that Cyril Ramaphosa and his administration face in converting stage one stabilization into a more substantial stage two reform agenda. So I'm going to dwell in the next 5 minutes on what that stage two reform agenda could be and what it could focus on. And here we're really talking about the kinds of structural reforms that would place South Africa on a better footing for medium and long-term growth. So we're talking about reducing the size of the state. That's across SOEs, that's within cabinet, that's across the public sector as a whole, professionalizing the state, engaging in very meaningful privatization or modernization initiatives of SOEs, particularly the largest and most fiscally compromised ones like SA and Eskom. You're talking about reforms to education, which requires pushing back against SADTU, which is now the largest affiliate in COSATU. You're obviously talking about mining sector reforms, which requires a new charter, land and agriculture reforms, which requires clarity on expropriation without compensation. So stage two is not as straightforward, so to speak, as stage one, in the sense that rather than simply appointing new officials in key positions, you're having to engage in the kind of reform that will have a political cost. There will be pushback against that kind of change. And I would argue that there are three priorities that the president needs to encounter in order to get himself into a position whereby stage two reforms are plausible. Number one, and we've seen a great deal of this in the last 2 months, he has to continue to bed down and fortify his internal political power within the ANC. And that comes down to making sure that provincial elections to elect new leadership across the ANC's provincial structures is broadly aligned to his style of rule. Now, coming into the year, we shouldn't forget that he got elected with 51%, not an overwhelming majority last December. He needed to make sure that he grew his constituencies in the 49%, in the provinces that opposed him, in the league structures that supported Nkosazana Dlamini Zuma's campaign very strongly, the Youth League and the Women's League most considerably, and the MKMVA. And that pursuit was never going to be straightforward. There was always going to be a regrouping of the group that he has displaced by becoming president. And we've seen signs of that in the Northwest and KZN in the past couple of months. Certainly the position we're in now is one in which we can look back on the elections that have taken place and understand that the president has absolutely gained power in areas that were previously quite hostile to his authority. KZN's recent election reflected that more than any other region, with a unity ticket elected to run that province for the next 5 years. In the Northwest, of course, Supra Mahumapelo is no longer premier, remains chairperson, but his capacity to access the finances that have run the patronage system in that province has been undermined by the Section 100 intervention there. And then, of course, we've seen other interventions with the elections in Gauteng and so on. So broadly speaking, the first priority for the president was to make sure that he didn't face a counter-assault, political counter-assault within ANC structures. And I think we've seen fairly meaningful progress in that area in the past 2 or 3 months. Secondly, and this is where we start to engage with the land question, it is absolutely vital that the president made sure that he grappled with issues around land reform, the mining charter, and any issue which touched on the broader transformation of the economy in a sensitive way. Because unlike his predecessors, Zuma in 2007 and as ANC president in 2009, as state president, Thabo Mbeki 97, 99, he inherited a very compromised body politic, a very compromised socioeconomic equation. He took power after 10 years of anemic growth, rising social frustrations, which is a key aspect of the elevated populism that we've seen entering our political discourse. Of course, he's got more political competition to contend with. If he moves too far to the right, he opens up space for the EFF on the left. Too far to the left, he opens up space for the DA on the right. So he's got those limitations in which he has to navigate a reform agenda. And then, of course, trust in government, trust in the ANC is lower now than it's been at any point in the last 25 years. Well, certainly towards the end of last year, it ebbed and we haven't seen new data. I imagine it has improved, but still the trust deficit is a very compromising factor. So we need to understand the debate around land in this context. We have to appreciate that, particularly in the election cycle in which we're in, and accommodating the socio-economic frustrations which have built up as a result of 10 years of economic underperformance, and of course a lack of trust in government brought about to a great extent by corruption and state capture, we have to appreciate that navigating the land question in this climate is politically very complex. And the expectations that the president would simply offer a message which would placate investors and calm the market ignores the political realities that he faces. And I think this week's statement really reflected those realities in the sense that the ANC is worried about conceding too much ground to the EFF on the land issue. It is also committed very strongly to embedding a more aggressive and more profound approach towards land redress, because if it fails in this now, and there is still an opportunity to deal with this fairly moderately, and I do expect that the outcome of this constitutional review process and the reforms that are embedded into law around expropriation will be moderate. They will protect property rights to a great extent. I think we'll see those protections embedded in the expropriation bill, and they will be held as they are in the Constitution as it is. But clearly we have to navigate through this current climate in a space that offers enough to those calling for radical transformation and enough to those arguing for the need for reform and stability. And that's a difficult place to be in. And I think it's in that context that we have to understand the statements made around expropriation by the ANC this week. The third issue is around the elections. Now, very clearly, Cyril Ramaphosa and the ANC require a mandate. You can't get much structural macro reform done if you don't have the mandate to do so. And that mandate requires the ANC to win a comfortable majority in the next elections. Now, this is not scientific per se, but the comfort that I would determine to be sufficient would be anything above 55 or 56%. Why that level? Below 55 is compromising for two reasons. Number one, it makes Cyril Ramaphosa, as the head of the ANC, having achieved the lowest share of the vote in any national election they've secured, if they did get sub 55 since 1994, it makes him look weak. And it certainly emboldens his detractors within the ANC and across the tripartite alliance. Secondly, very importantly, if you just crunch the numbers on a basic level, if the ANC gets less than 55 at a national level, the chances are that they've lost Gauteng, because it's almost impossible to sustain Gauteng's majority and yet to still register a total national level of sub 55. And we saw that in the municipal elections. The ANC got around 54 total, but they dropped below 50 in Gauteng. And of course, it didn't matter at a provincial level because they were municipal elections, but they of course did cede power in Johannesburg and Tshwane. Now, if they were to lose the majority in Gauteng, that would introduce the complexity of a coalition in the biggest, most economically important and politically important province. And that coalition would more likely than not be with EFF, which would definitely complicate the long-term policy reform agenda at a national level, because the EFF would demand a seat at the table nationally in order to justify the coalition that they would build and to provide the ANC with the majority in Gauteng. So the ANC needs, or Cyril Ramaphosa more specifically, needs 55 plus in the next elections. Now, if elections were tomorrow, the polls suggest that they would get that for a number of reasons. On the one hand, the opposition is in a relative state of disarray. The DA's internal frictions and its own policy incoherency is giving them a sub 20% at the moment, which is a dramatic decline on their expectations for 2019, which at one point were for around 30%, and a coalition win in Gauteng. That appears to be deeply unlikely in the current context. So the ANC, as it stands, would probably get upper 50s, 60%, but elections are still 8 or 9 months away, and a lot can change within that time frame. Bear in mind, KZN will see some decline for the ANC. This is a province which has typically voted along ethnic nationalist lines, and the ANC is not as well represented in that regard now as it was, of course, under the Zuma administration. There are deep divisions in the ANC in the northwest that may compromise their electoral performance there and open up space for the EFF. And thirdly, even though the DA is committing misstep after misstep at a national level, they do have the powers of incumbency in Gauteng. In Johannesburg and Pretoria, they have the capacity to argue that it is them as a party that has delivered social benefits for the past 2 years, whether these be grants or RDP homes or the distribution of title deeds. And those patronage benefits do matter in an election cycle. And they may limit the ability of the ANC to rebound as strongly in Gauteng as some have assumed they would on the basis of Cyril's presidency. So I guess I'm emphasizing here that 55 plus is likely, but it's not guaranteed. And we are going to have to see the ANC engage in a vigorous campaign in the next 7 or 8 months, or depending when elections are held, in order to make sure that they emerge from the elections with the kind of mandate that Cyril Ramaphosa and his allies require to be able to take tough decisions to engage in a structural reform agenda. So those are my main thoughts, and I think we need to conceptualize the next 6 to 8 months in that way. We need to understand that we're in an intervening phase. This isn't Cyril Ramaphosa's first term. This is a year and a bit which many presidents have battled to really accommodate. I mean, bear in mind, last time we had this disjuncture, Kgalema Motlanthe was appointed as acting president to tide things over until elections. So Cyril Ramaphosa's first term should only begin effectively for a full 5-year term at least after next year's elections. And provided these 3 things play out in a relatively supportive way, my expectation is that post those elections you could start to see more substantial reforms feeding into the political system. So it's a big ask to ask for people to be patient and wait for that stability to emerge and watch the signals until we get to that point. But that's how I'm interpreting the political climate right now. Before I hand over to Elna, perhaps let me place a little more emphasis on the land debate, just to understand what is next in that process and how we think things are going to pan out. So very clearly, the ANC has made it clear that they will make an argument to the Constitutional Review Committee that some change to the Constitution is necessary in order to more explicitly enable the state to expropriate land without compensation or property without compensation. Now, bear in mind, this is not the ANC arguing that the state needs to accumulate more power. It's effectively or quite simply saying that the Constitution should be clearer in expressing the powers that the state already has. Now, if any of you who are dialing into this call were to go and read Section 25, subsections 1, 2, 3, and 4 of the Constitution, it's very clear that the state has strong powers of expropriation built into the Constitution. It has chosen not to use those powers. It hasn't been limited in its ability to use those. It has selected a policy approach which has prioritized market-related compensation rather than the other determinants of expropriation that the Constitution allows, such as taking into account the public interest or how the land was acquired or how the land is used or if it's underutilized or unused and so on. So effectively, the ANC is arguing that those lines need to be made more clear. The public interest should trump other determinants and the ANC's powers of expropriation should be made more explicit. There's a very different argument to saying the state wants more power rather than it wants to clarify the powers it already has. And our view is that the statement the other night from President Ramaphosa is really geared towards the Constitution potentially being tweaked for the state to have, well, for the current powers of the state to be better articulated. Now, bear in mind, that is now likely that the Constitution will be changed if the ANC supports it, but it's still not guaranteed. The Constitutional Review Committee must make its recommendations. Parliament must debate the issue. They need a 2/3 majority to pass that. And you could even see an interesting complexity emerge if the ANC and the committee proposes a moderate resolution to the Constitutional Review, and the EFF opposes that, saying it's not radical enough. And in that regard, the motion doesn't pass because the ANC would require the EFF support to push it through. So that process is going to be interesting to watch. The Constitutional Review Committee is due to report back with its recommendations on the 28th of September. And separate to that, I would urge you all to pay attention to the ongoing process of the expropriation bill in Parliament, because that will be the enabling piece of legislation which will give effect to the state's expropriation powers. And as it stands right now, the expropriation bill is a fairly well-articulated and reasonable document that provides fairly strong protections to property owners. In fact, to a great extent, it's been modeled on pieces of legislation that we've seen in countries like Australia and Canada. So this is not entirely unconcerning. Certainly we are watching this. This is an issue which certainly is framed by the election cycle and by the populist rhetoric that we see in the build-up to the next elections. But we would urge you to understand it in the historical and political context in which it is operating, and to understand that the changes that are being proposed are not as substantive as some commentators may have suggested in the past few days. So with those opening remarks, let me hand over to Elna, and then we can take questions and points of discussion later.
Thanks, Simon. So the slide that I have here just start off at exactly that point of the two phases of political reform. And from an economic perspective, that is quite important, that you had these very encouraging signals at the beginning of the year, but a lot of changes still have to be effected to really have an economic impact. So the graphs that I have here shows on the left-hand side, firstly, that yes, if we ask businesses' opinion on this, they are less concerned about the political environment as a constraint to economic growth now than they were at the end of last year, but it is still a relatively high concern expressed in this survey result here. And on the right-hand side, if we then look at all of the growth constraints identified by businesses, if government is 100% successful in all of the things that it's currently working on, so if it is, for example, fully addressing all of the corruption concerns, etc., we are in total only addressing about a quarter of businesses' key growth constraints. And so the point that I'm trying to make is that confidence is better. It is certainly better, generally speaking, than a year ago, but a lot still needs to be done from an economic perspective to reach a better potential growth rate, for example. So what I show here is consumers' perceptions of the current situation. So on the left-hand side, yes, very strong increase in consumer confidence, record high levels in the first quarter. But if we then unpack that on the right-hand side and we distinguish between consumers' perceptions of the macroeconomy and what they hope the situation will be like over the next 12 months, very optimistic. If we then look at the light line at the bottom, you can see almost zero rating in terms of time to buy durables. In other words, yes, very hopeful that things will improve, but at this stage not ready to commit in terms of purchases and respond to that from that perspective. And of course, one of the changes, maybe let me just go back. If you look at the graph on the left-hand side, you can see that for the middle income groups, even the confidence in the macroeconomy has started to fade. I think that this reflects some of the pain that we're seeing from the spike in petrol prices. And if we try to quantify that impact, you can see in these two charts that it has quite a significant impact. So what I demonstrate here is on the left-hand side, this is the base case view for this year. So this is saying inflation relatively low, and therefore even if you have somewhat of a moderation in your nominal wage growth, you still end up with reasonably high real wage growth. So in these graphs, I look at the exact inflation basket of every income group. I look at the exact impact of taxes and monetary policy or interest rates, and try to quantify that impact. So in each of these graphs, the brown lines illustrate just the impact of inflation. Then moving to the orange bars, I add the impact of tax changes that we had in the budget, and then in black, the little bit of relief that we had from the interest rate cut earlier this year. So on the left-hand side, base case for this year, quite comfortable, at least 1.5% real spending power growth for all income groups, and higher for the lowest income groups because they are getting the biggest benefit from the low food inflation. But on the right-hand side, I give you some sense of what the situation looked like if everything else is the same, but the rand is a little weaker, oil prices higher, so that petrol prices remain at their current peak. So then you look at the brown bars there, add the tax impact in the orange, and then if the SARB has to respond with 2 rate hikes of 25 basis points each, you end up at the black bars. So then, just with these changes, you end up negative for all income groups. And so in terms of the changes since the beginning of the year when we had very optimistic expectations, this oil price change and rand weakness is clearly having a significant impact on the consumer side of the equation. And this year's growth was always going to be driven by the consumer. So it is quite meaningful if we have this kind of headwind to consumers. We never expected this year's growth to come from fixed investment because of all of the delays that we've spoken about earlier, that it takes time to really make the economic policy changes that can affect fixed investment. So if we then move to the fixed investment or private sector fixed investment part of the equation in particular, there's enough economic support to see a recovery in private sector fixed investment. So the graph on the left-hand side gives you some indication of where private sector fixed investment is relative to demand, whether I look at just domestic demand or domestic demand and exports. So it's relatively low. In other words, we don't need stronger demand to justify a recovery in private sector fixed investment. We need all of these other policy uncertainties that Simon spoke about to be resolved before this will really improve. And the graph on the right-hand side just shows that general profitability has also started to improve. And again, then the economic arguments certainly support private sector fixed investment recovery. It's just all of these political uncertainties or policy uncertainties that still stands in the way of a decent recovery. From a growth perspective, we also have to keep in mind the fiscal constraints and the impact that this will have on growth. So the graph on the left-hand side just shows that in nominal terms, this year, there will be very little growth in total public sector infrastructure spending, so about 2%. That is without taking into account any of the usual underspending. On the right-hand side, you can see that there's typically very large underspending relative to budget, simply capacity constraints. And we suspect that there could be further underspending this year as government tried to clean up the corruption processes, etc. So that's the kind of anecdotal evidence that we're getting. But the point is still then very little, if any, support coming from public sector infrastructure spending to the growth side. On the left-hand side, just demonstrating the limited fiscal space. On the right-hand side, we think that tax revenues will underperform this year. Now, fortunately, in terms of the deficit numbers, the under-recovery that we see on the revenue side should be counteracted by the underspendings that I've mentioned. And so, therefore, the budget numbers may still remain unchanged, and we may be able to avoid any further tax increases next year, despite the possibility that tax revenues could disappoint someone. The other big change since the beginning of the year is, of course, the global story, and specifically the trade war impact. So our view is that what the markets have priced in is not only the expected impact, but it's also reflective of a very high risk premium because of significant uncertainty. So the table here shows you the estimated economic impact. So if we just have tariff increases on the left-hand side between the US and China, or on the right-hand side, the broader group of countries that the US is considering increasing its tariffs with, then you can see the economic impact is about 0.1%. That growth should be lower. If we add to this a significant negative impact on confidence, it basically doubles that. So then you're saying if previously you expected global growth to be 3.5%, for example, growth could be 3.3%. So yes, it's material, but it is not as significant as one would have assumed just looking at the market reaction to this trade war. So we then believe that you don't need a better global economy to see, for example, currencies in emerging markets, including the rand, being stronger. And I think we've already started seeing that more recently. You just needed a bit more certainty about the ultimate parameters of this trade war. And I think this argument is supported on the right-hand side if you look at what's been happening to the growth forecast. So what you have here is how the growth forecast for 2018 has evolved over time. And so, yes, people are generally slightly less optimistic now than they were, say, a month ago about global growth. But you can see still much more optimistic than, say, at the beginning of the year or last year. And so, therefore, I still believe that it's not that the markets are not reflective of the expected impact on, say, growth, but it's more this uncertainty that we saw having a big impact. For South Africa, unfortunately, the big risk that we're still facing is terms of trade, in other words, relative export to import prices. So on the left-hand side, you can see that we've already had a significant negative movement at the beginning of the year. So it's a combination of lower export prices and then the increase in import prices on the back of higher oil prices. Our view is that it will stabilize here, so no further deterioration in the terms of trade. But on the right-hand side, I demonstrate what the impact will be on current account deficits by the end of the year if oil prices are are about $10 per barrel higher than the consensus forecast. And you can see for South Africa, it makes a difference of about 0.5% of GDP. So it is quite a material impact. Our base case view is in line with the consensus that oil prices will come down slightly. But if we're wrong on that, it would be a significant risk to the current account deficit in general. But our forecast at this stage is that the current account deficit will be about 3.5% of GDP. So that's up from 2.5% of GDP last year. And that is quite important because it means that it's not a material foreign funding requirement. It should be relatively easy to fund that. And so the current account shouldn't be too much of an issue for the rand. So if we then look at the value of the rand, on the left-hand side here is the results of our econometric model that compares the rand with the Australian dollar and then make adjustments for all of the economic fundamental differences between these two economies. And you can see there that this model suggests that the rand is slightly undervalued, and we get kind of the same picture if we look at other estimates of a fair value for the rand. For example, purchasing power parity estimates on the right-hand side, or, for example, the real trade-weighted rand. So we think the rand is still slightly undervalued, and we expect it to recover towards the end of the year. And I think what you need is just a bit more certainty on the global economy. So our forecast is about 12.70 against the dollar by the end of the year. And that then is obviously quite important from an inflation perspective. So our expectation that the rand won't be very inflationary is a key reason why we think inflation will remain comfortably inside the Reserve Bank's 3 to 6% target range. But there are a couple of other indicators that are also quite important in this regard. So one is the inflation and administered tariffs that you can see here. It's been trending downwards. And very importantly then, inflation expectations, and I mentioned a little bit earlier, wage settlements as well. So generally, the underlying inflation picture is relatively benign. And so we then believe that the SARB is not going to do anything with interest rates over the next 12 to 18 months. It will continue to sound very hawkish, and it is absolutely committed to bring inflation, to anchor inflation properly inside the 3 to 6% target range, but we don't think it will be necessary for the SARB to hike interest rates. And so this is just a summary of our forecast. There might be a little bit of downside risk to our 2018 growth forecast at 1.7% still. We never quite bought into the optimism at the beginning of the year when people started talking about 2.5%, 3% growth. We've had this forecast for some time. Like Simon said, some of the recent indicators have been a bit disappointing. Partly an agricultural story, partly the pressure from petrol prices on consumers. So a little bit of downside risk, but we think that we should at least achieve government's 1.5% forecast for this year. And so we're not overly concerned about the fiscal impact if there is then a bit of disappointment on the GDP side. Next year should be better, but this is premised on getting more certainty about these policy issues that we've been discussing that is still somewhat uncertain. And as you can see in these numbers, it's really a consumer-driven growth story with fixed investment taking longer. Remember that these forecasts are for total real fixed capital formation. So nothing coming from the public sector, a little bit from the private sector, with a better recovery next year premised on a better policy situation. Current account remaining relatively contained, and that's one of the reasons why we're not overly concerned about the rand. So the rand relatively strong, inflation then contained, and the Reserve Bank doesn't have to make any changes. Thank you.
Right, thank you very much, Elna. And thank you, Simon. I think you both touched on very, very important and very topical issues. Obviously, everyone very, very concerned about what's going to happen, what's happening in the country, what does it mean for their pockets. And before we go over to the questions, I just want to draw everyone's attention to the disclaimer. Please just make a note that make a note of everything that's noted in there and the purposes of this research or the presentation itself, and this is just a continuation of the disclaimer. Okay, so you're welcome to send your questions through. Simon, perhaps let's take the first question for you. Guy wants to know, would it not be preferable to have early elections to provide Sir Ramaphosa with the mandate he needs to push through reforms sooner rather than later?
Absolutely. The strong reasoning behind that theory, the Cyril Ramaphosa's allies were putting the message out around March that they were going to push for elections in November. The reasoning was threefold. You've already mentioned one of the major reasons, which is that the sooner you can get elections out the way, the sooner you can push through a reform agenda. So absolutely, that was one of the key determinants. Number two was to take advantage of the positive momentum at the time when people were talking about early elections around March. That was deep in Ramaphoria era, and people were feeling quite strongly that the elections now would help the ANC quite considerably. The third reason was linked to the ANC's own internal politics, was to say that if you can have elections out the way, that more and more ANC provincial structures will fall in line, will fall behind Cyril, because now he's got a strong 5-year mandate. To an extent, two of those three still stand. I mean, I agree with you absolutely. The sooner we can get these out the way, the sooner we can have a clear line on land, the sooner we can really move forward with some meaningful structural changes. The problems is really around the IEC's readiness for elections. So the two challenges that people put forward to suggest why early elections were not plausible, the number one was the ANC was not ready. It still had to deal with its own internal political battles in provinces like KZN and the Northwest and elsewhere in order to be able to begin its typically quite controversial lists process. So where it nominates people for positions of premier or positions of key power in the provincial structures if they are to secure the election mandate. So that was always going to be a challenge. Now that they've dealt with the provincial elections in KZN, in Gauteng, in Free State, they're actually in a fairly good position to start that process. However, the IEC recently communicated that it hasn't yet concluded its verification of the voters' roll. There's still about 1.2 million addresses that are not yet verified. They asked for another 17 months to verify those. They're not going to get that, not by a long stretch. The problem, of course, is that the Constitutional Court said about 2 years ago that if those addresses are not verified, the people who are attached to those addresses can't vote. And it's a big constitutional dilemma, because if they don't vote, then you're impinging on their constitutional right to vote. So that is a complexity. My view is that we will still see elections next year, probably in the normal cycle of about April or May. But this is something that I'm tracking. Clearly, the Ramaphosa camp still wants to hold them early. And I think it's an outside possibility. I would give it a 20% chance now that we'll see elections this year. But it's not completely out of the question. But yes, your reasoning around why that would be a positive is certainly sound. So corroborating that.
Okay, thanks, Simon. And Elna, a question for you from Robert. Robert wants to know, considering the general lack of confidence, is there any market sector which you feel may be showing some growth in the next year?
So at this stage, we're still reasonably optimistic about the consumer outlook. So firstly, it depends on your view on oil prices and the rand, which would drive the inflation outlook. And so that would influence your view on the retail sector. But generally, we're still quite optimistic about that. That is as a general sector. It is, however, quite difficult to make general comments about all of the sectors. So, for example, in the mining and manufacturing sectors, overall, we're not particularly optimistic. But once you start looking at the subsectors or industries, there are some pockets within the mining sector that are producing and exporting at record high levels. In the manufacturing sector, equally, in some industries, your export volumes are now 60% higher than they were prior to the peak before the global financial crisis. So some industries, but overall, if we just talk about the sectors, we're still constructive about the consumer. I should perhaps also mention the credit cycle. So we think that I've just spoken about the inflation part of it and the real wage or spending power part of it, but we also believe that the 10-year deleveraging cycle is largely over, and you'll continue to see an acceleration in consumer credit growth, and that should then also provide a little bit of support to the consumer outlook.
All right. Thanks, Elna. And Simon, a question for you from Hiran. Hiran wants to know, if the EFF wins a greater share of the national vote in 2019, would the constitutional change to the land reform be more radical, or would this push the ANC to more to the right?
Very important question. There's three components to that. Three components to my answer. The first component is, yes, the EFF is an unashamedly leftist, radical, populist party. They wouldn't call themselves populists, but they absolutely are. In fact, some of the positions they take on key issues are not leftist at all. They're quite right-wing. But effectively, they occupy a space to the left of the ANC and try and pull the policy agenda towards them. So, in principle, yes, if the EFF wins a greater share of the vote, you would expect the tone of policy engagement at a national level would shift closer to the left on some issues in which the EFF would have the ability to disrupt consensus. But I think that your reasoning around the potential that the ANC would actually hug the center or even move towards the right to accommodate that threat is not unsound. I mean, certainly it would depend on how the economy is growing. Let's step back and understand that a party like the EFF thrives on economic failure. So if the economy can grow well, I mean, if Elna's forecast of 2.3% next year holds, then I think that's a benign enough. It's not going to solve our problems by any stretch, but it's a benign enough outlook to limit the amount of oxygen a party like the EFF can derive from the political space. And it may offer the opportunity for the ANC, to adopt policy positions in support with the support of the DA, even if they find that those policy positions have the opportunity to drive the growth agenda in a more reasonable way. The second component to the answer is to really emphasize that the EFF's ideology it really shifts depending on the political mainstream of the day. So yes, they are a leftist party, but Julius Malema's ideology is really to be non-mainstream. So during the Zuma administration, it was comfortable for the EFF to occupy the space of being a constitutionalist party and pushing Zuma on the governance problems and against state capture. And it actually garnered a lot of public sympathy as a result of that. Now, of course, the mainstream has moved into a more palatable space. Cyril Ramaphosa is saying the right things about corruption. He's moving the right people into key state institutions. So the EFF is having to outflank them in the non-mainstream areas, which is in many reasons why they're going into traditional areas, why they're trying to occupy areas in which they feel the ANC is ceding their space in because of the modernization and urbanization of the ANC under Cyril Ramaphosa. So that offers the opportunity for the ANC to actually go back to its roots. Because let's not forget that in its 100-odd-year history, the ANC has always been, or primarily been, an urban intellectual party. It's under Jacob Zuma that it unhinged to an extent and became more rural and traditionalist. But under Cyril Ramaphosa, we expect it to migrate back towards its more comfortable home. And that will mean that the EFF is going to have to farm out support in other areas, which is going to be difficult for them to have to garner. When it comes to the specific issue around the Constitution, if the EFF gets, say, 15%, which is highly unlikely, they are polling currently at about 7 or 8%. I would be very surprised if they broke double digits in the next elections. But let's say in a radical scenario, the EFF gets 15, the ANC pushes below 50, and then we engage in a constitutional review process with the EFF having that kind of strength, then yes, absolutely, we could expect the constitutional amendment would be more dramatic. However, the last component of the answer is to understand that the EFF's position on land reform is actually quite unpopular across the body politic, because it's not just for the expropriation of land without compensation, but it's for the full nationalization of the land. So the state would be custodian of all land. And the ANC can play on that because it is not a popular position amongst the middle class, the black middle class, even informal areas, where people have access to titles over their RDP home, or whether they have had access to titles over the land that they occupy. The EFF is suggesting that that should all be relinquished to the state. And I think that is generally a fairly unpopular view. And it would be very difficult for the EFF to embed that view in legislation or the Constitution. But yes, the wording of that review would be more dramatic if the EFF performed very well in next year's elections.
Thanks, Simon. And once again, just to make sure that everyone is aware of the disclaimer, if you have any questions, please send them through. Okay, Stuart just wants us to go back to the oil graph. I'm not sure, Stuart, if you have a specific question regarding the oil graph, or if you just want to see it. And for anyone who's wondering if the presentation will be available, yes, we will have a recording of the presentation up on the OST website later.
Get the slides as well,
yeah,
if they want to.
So, and we'll make the slides available should you want them. They'll also be up on the on the OST website. Quinton, thank you very much for your comment. Much appreciated. Okay, I think that's about it. Do you guys have any closing remarks on yourself?
Let me just close by offering one point, which is that just to emphasize that we're in a period of transition. I think we should not underestimate the baggage that the current administration inherited, and the time that it would reasonably take to trawl through that, to position ourselves in an environment in which Elna's outlook around the kind of reforms that we need to really re-gear the economy are required. And I think that is a process we're in right now, where we're starting to see the political inputs to get us to that point. We are in an election cycle, and we have to wait for the elections to be in the rearview mirror. That is normal in any contested democratic system. And I think that we just need to occupy ourselves with watching the signals and determining where they are generally progressing. Our view, or at least my view from a political perspective, is that in December last year, we embarked on a grinding upward trajectory. It was never going to be V-shaped. It was a trajectory which would face resistance from the vested interests that occupied the political space in the last 10 years. But it's at least the direction of travel appears to be broadly positive. Not without disruptions, not without hurdles, but that's the trajectory that we see within the political environment. And it does give us pause when we consider what are ostensibly fairly negative data prints coming through in the past few weeks, in understanding and contextualizing these in the long term. So thank you for dialing in, and thank you for your questions as well.
Thank you very much, Simon, and thank you, Elna, for a very insightful and much needed clarity in both presentations. And, let's hope that between local elections and the run-up to the elections and what happens on a global scale, next year looks a lot rosier than we anticipate. Thank you very much, guys.